Welcome back to another explainer. Look, I am so thrilled to have you here today because we are going to completely unpack the mechanics, the risks, and the absolutely incredible potential of the FANG Plus index. And, we aren't just going to sit here and swap opinions. We are going straight to the hard data to see what's really going on under the hood. Okay, let's dive right into this. Here is our roadmap for today. First, the current state of FANG Plus. Second, warning signs and opportunities. Third, the power of concentration. Fourth, the truth about rebalancing. And finally, number 5, the AI supercycle. Let's get to it.
Part 1. Current state of FANG Plus, the 10-stock phenomenon.
Now, to really wrap our heads around this index, we've got to look at what the market has been doing lately. I mean, check out this staggering figure, 23%. Despite all those voices out there claiming FANG Plus had already peaked, the index surged over 23% in less than a month recently. The data simply doesn't lie, guys. This sudden, massive jump is proof of the immense ongoing power of this specific group of companies.
So, what exactly are we talking about when we say FANG Plus? Well, it's absolutely crucial to understand that this is not your typical broad market index fund. It doesn't hold hundreds of average middle-of-the-road companies. It is a highly concentrated, super aggressive wealth generator made up of just 10 elite U.S. tech giants. The index is ruthlessly rebalanced 4 times a year, constantly trimming the fat to maintain optimal performance. And the results? It has surged an unbelievable 19 times over the past 10 years, blowing right past 1.1 trillion yen in net assets. It's a machine.
Moving on to part 2, warning signs and opportunities, reading the macro economy. Now, what's really interesting about this slide is, while FANG Plus is absolutely crushing it, we can't be blind to the broader economy, right? Take a look at the recent moves by Warren Buffett's Berkshire Hathaway. They have pushed their cash reserves to an all-time record high of roughly 32%, selling off about 1.3 trillion yen in stocks. When the world's most famous investors start stockpiling cash like that, we all need to pay attention. And here is exactly why we pay attention. If you look back historically, you'll see this distinct, almost clockwork pattern. Buffett's company has masterfully built up its cash reserves right before major market shocks. We saw it just before the dot-com bubble crash in 2000, the Lehman shock in 2008, and the COVID-19 shock in 2020. They're literally preparing the war chest they need to aggressively buy the dip. Because let's be honest, market crashes are undeniably terrifying. Watching the Nasdaq drop an agonizing 77% after the dot-com peak is brutal. But historically, they serve as the ultimate buying opportunities. The long-term recovery from those post-crash bottoms has yielded returns of up to 30 times the initial investment. So a crash isn't just a loss. For the prepared investor, it's a massive, once-in-a-decade wealth-building catalyst. All right, part 3, the power of concentration, the winner-takes-all economy. And this brilliantly illustrates a major question. Knowing that major market shocks are possible, why on earth would you risk holding a concentrated 10-stock portfolio? Well, look at this reality. Out of roughly 3,000 stocks in the U.S. market, just the 10 companies inside FANG Plus generate approximately 29% of the total market capitalization. Just think about that massive economic disparity for a second. 10 innovative companies carry nearly a third of the entire market's weight. We are rapidly entering a winner-takes-all structure. Instead of weighing down your portfolio with a mountain of average pebbles, by holding the entire S&P 500, FANG Plus focuses entirely on holding those rare, explosive gems. The days of hundreds of companies contributing equally, those are fading fast. Today, a tiny handful of deeply innovative companies generate totally disproportionate profits. Which brings us to part 4, the truth about rebalancing, ruthless optimization. So you'll hear people claim that frequently replacing stocks means the fund's strategy is failing. Actually, scratch that. Historically, we see the exact opposite story. When Alibaba and Baidu were ousted, AMD was brought in, and AMD subsequently surged 300%. When AMD was later swapped for Broadcom, Broadcom surged an incredible 400%. Even when a great company like ServiceNow underperformed, it was swiftly replaced by Palantir, effectively cutting the fund's losses. This index acts as an automated, ruthless stop-loss. It sheds the underperformers incredibly fast while catching massive multi-100% winners. Now, that historical context is vital to understand the most recent and arguably most exciting rebalance we've seen. CrowdStrike has officially exited the index, and semiconductor giant Micron Technology has entered FANG Plus. So, The crucial point is, why was Micron added? Well, their metrics are frankly absurd. Revenue is up 196% year over year. Their earnings per share grew by 7.8 times. They are projecting an 81% gross margin. For a hardware company, that is practically magic. That's literally a software-level margin. And their high bandwidth memory for AI, completely sold out until 2026. Clients are paying massive premiums upfront just to secure their future supply. It's wild.
And hey, it's not just the new blood dominating. Existing FANG Plus staples like Google are aggressively proving their resilience. I mean, despite all the fears going around that AI chatbots were going to disrupt traditional search, Google posted a 19% increase in search revenue, plus robust YouTube ad growth. And they did all of this while ramping up their capital expenditures. The big players aren't just sitting still, they are adapting and thriving. Seeing all this massive demand naturally begs a question I think we all have to wonder right now. With these incredible tech surges already happening, is it simply too late to ride the AI wave? Did we miss the boat? Let's move to part 5 and see how this builds. The AI supercycle, a 10-year horizon. Zooming out from the day-to-day quarterly earnings for a second, I really want to share a vital quote reference in a recent Federal Reserve Board context. AI is overestimated in the short term, but underestimated in the long term. This is the absolute perfect lens for an investor. It means we might very well see a short-term bubble burst or a sudden market shock, which, as we discussed, is a huge buying opportunity. But the long-term, decades-long trajectory of AI, it's fundamentally unstoppable. Trace this projected timeline with me. ChatGPT only just emerged in 2022. It already feels like old news, but in the grand scheme, it's brand new. By 2030, experts project AI will actually exceed human intelligence in many areas. By 2036, we are looking at living in a fully AI-centric world, potentially reaching the singularity by 2045. We are only in the very early innings of a massive supercycle here, and supercycles always disproportionately reward the long-term holders of innovative tech. Bringing this high-level macro data down to a highly actionable mathematical reality for us, if you utilize tax-exempt investment frameworks, analysts currently estimate that a 2.4 million to 3.6 million yen investment in a vehicle like FANG Plus today yields roughly a 25% chance of hitting the Okuribito milestone. That's 100 million yen within the next 10 years. Think about that. That is a 1 in 4 chance to build truly monumental wealth during this supercycle. I want to end today's explainer with a really provocative question for you to chew on. Knowing that market crashes create generational buying opportunities, and knowing for a fact that we are standing at the dawn of an unstoppable technological shift, will you let short-term economic fears cost you your position in the greatest technological supercycle of our lifetime? You've got to weigh the risks of volatility against the monumental cost of missing out on the future. Thanks so much for joining me on this explainer, and keep learning.